So hello guys, in this video I'm going to talk about why should you not buy dips. And if you're not buying dips, what is something else that you should do, or what is the procedure that you should follow? Now lately a lot of people have been asking me when should I buy a stock, when should I, the market has fallen significantly. Should I jump in now? Should I buy in now? And I'll be giving an example firstly about when was the last time that I bought stocks and how do I look for accumulation. Now I know that this is kind of for the long term. So in case if I buy the stock and the stock is heading lower, it does not mean that I sell the stock. I rather have some kind of liquidity or I always have a percentage of cash that's kept aside, which allows me to, buy in a later period of time. And obviously, the inflows that come in, they don't come in one lump sum flow, they come in months, right? So I'll be talking about what did I do. When was the last time I bought stocks? So the last time I bought stocks was in February, and after that I did not buy any stocks. So the March, April, and May inflow that are still half to deploy into the markets have not been deployed into yet. And when will I do that is going to be explained in the end part of the video. I will talk about what are the things that I'm looking at and what are the things that I want to happen for me to accumulate in the long term. And just a simple tip or whatever, averaging out dollar cost average, something that I don't follow. Something, I mean, if it works for you, all good and all, but this is something that works better for me. This is something that I've been doing in the past and has favored me. So yeah, let's skip to the part firstly when I explain you what is that, when was the last time I bought stocks and what was the reason. That was also the reason of why I exited them at first, because as important as entry is, the exit is also equally that important. So yeah, let's jump in. So on 8th of February, right? So this is our entry candle, right? This is where I entered majority of my IT positions. I didn't buy anything else in February. In January, I must have bought stuff and sold stuff. So if you follow my Telegram, you know that I was very heavy on ITs, and I exited my ITs around 38,000 levels. And if I were to explain why, there are two reasons. One, obviously, there has to be a reason on the chart, otherwise, I don't exit. The very first reason was this breakdown that came. Now, just understand that any price that is moving in such a steep manner is not going to sustain. Take Nifty for example. You see this one-sided momentum that's coming here. These things don't sustain. There always has to be some kind of structure, some kind of zigzag movement to come. Now, when did I exit my price? And I tell you why. Because I'm going to get back to why you should buy this, but this is also an important thing as I'm covering this as well. Let's use RSI. All right, RSI is something that I use only to understand divergence. I don't look at overbought, oversold, and all of things. I had a breakdown over here, right? But what was the structure being formed? There was no kind of very bearish structure. The day's low was also protected, and over here we had a breakout. Now this breakout, what did it do? So over here, I was actually bearish over here. I was thinking of exiting over here. But when this green candle came, I think, okay, maybe it's just my uh, foolishness or whatever. I should not sell my ITs. Because now, when you see such a big power candle, you get bullish, right? And what happened was that after this point, this was like a retest that happened here. And then this candle that you see is where I exited all my IT holdings. And this was the first reason, but let me complete it. Do you understand that this low, this high, right? This high that's created over here, it's the same at this region. And let's look at the next high. Next high was created over here. Look at the RSI over here. It's lower, right? So you understand that the price is creating a higher high, but the RSI is creating a lower high. What does it tell you? That there is a divergence. That means that there's no strength in this price anymore. So this is where I exited all my IT holdings. After that, what happened? The price did move higher. Are you looking at RSI? It was actually just moving lower. So at no point did I actually think of re-entering at this place. And after that, a very good thing happened, something that I follow a lot. One second. So then what happened was that a double top was formed right here. So you see a double top was formed, and I had a very significant position in IT companies. So when I exited around here, and I was seeing ITs falling. See, this is every dip. What is this? This is a normal dip, another dip. At no point of these candles did I look for an entry. And I mean, if you look at normal support levels, demand levels, that is also something that I don't really follow when it comes to buying. So this in a way is kind of like a support. Right? This is the last high. This was like a reverse head and shoulder. So this was also area that I did not consider. Now, when this support region was broken, right, I did not even enter over here or here or here. So now one thing that happens in the market is often right when such obvious supports are taken out, right? When such obvious setups are made, what did the market do over here? After what 5 days of red candles, that was a green candle. And over here, who enters the most? It's retailers because who follows support and demand the most? It's retailers, right? And after this accumulation was done, the operators or the smart money, what they did is that they trapped these people by creating a huge red candle. Now, I did not even enter in this upside part because uh, what I want you to understand is that there was so much of selling that happened over here, right? Now, are they not going to book their profit? They are, right? So they're booking the profit. What does it happen when you book your profit at a short? There's going to be short covering that kicks in. And this is what I was thinking short covering is happening. Oh yeah, look at this candle. It went much higher and later further short creation, short positions are created. And after the market went in this region, right? I was like, I need some kind of dip to be formed is when I'll enter my position in ITs. And so one thing I want you to notice that I didn't buy any of this region, right? This V shape recoveries never happen. They never happen unless there's some kind of miracle, which is super rare. So why should we follow something which is extremely rare? We should rather follow something which has happened in the past a lot of times. Now what happened here is that after this dip that came in, there was another dip. So one thing which I want you to know, something which people argue with me a lot about is that there are two reasons, there are two patterns of it. One's a vanilla double bottom, right? I'll just make it better. One's a vanilla double bottom with same bottoms, and the other is this kind of double bottom. Now, what do you think? Which one is this more bullish or is this more bullish? Now, a lot of people, a lot of textbooks, what they follow is that this is the best double bottom. If this comes in, price is going to move higher. Higher chances of price moving higher. But what I really like to believe is that this double bottom is the most bullish kind of double bottom. Now, I want you to understand that these patterns are not just for namesake. You need to understand why are these patterns being formed. I remember a lot of people just tell about, oh, it happens in history, it has happened in history a lot of times, so that's the reason why it works. And that's a very dumb reason to believe. If you find that a reason to, a reason by, what do you say, decent enough to bet your money on, then I'm sorry, but that's not how things work. Now let's understand the reason. Like, why does a double bottom even happen? Let's say you're an operator. Let's say think of yourself as an operator. You have thousands of crores. If you want to accumulate any stock, any anything that you want to do, you cannot accumulate one go. So if you're going to buy 1,000 crores or something in one go, what is going to happen? Your average price of buying is just going to increase every instance. And why would you do that? You're hurting your profitability, right? So what you are going to do as someone who has 1,000 crores, you're going to buy in tranches. So if let's say this bottom kicked in, and I am buying at this tranche. I'm an operator now. I'm not friendly. I'm an operator. I buy first tranche. Maybe I put in 100 crores or 200 crores or whatever amount, and then the price starts moving higher. Will I again buy higher over here? It does not really make sense, right? Because I bought over here. Now the price is already 6% up. So what my motive would be is to bring the prices a little lower. And that is when the prices come in lower and when I can buy my other lot, my other tranche, is why a double bottom is created. Because it is helping me have a more profitable trade. Now understand one thing, okay? If you're an operator and first you bought over here and the second you bought over here, definitely in this scenario, your profitability percentage is higher because your average price is almost the same and we are assuming the market is higher. But understand that when this happens, you're buying over here and when prices are heading lower, you're not even waiting for it to come till this level. You're buying it at this instance only. What does it mean? That you're very, very bullish and you're not expecting the price, you're not even waiting for the price to come here. You're hoping that yeah, say price will check and that's why you're buying it right over here. So if you're doing this, what does it mean? That you're very bullish. And let me be really honest with you, like how at least I see the market is that the market is run by operators. what I or you think about a stock being fair value or not does not mean anything. At the end of the day, somebody with high money has to pick it up, and that is when demand is greater. That's when the price is going to move higher. So that is what I follow. So this double bottom that was created, right, is where I entered my stock. So I don't really do dollar cost averaging or as such, but I have this thing that I always buy in two tranches. My first tranche was right over here because I was expecting that okay, this is a double bottom, this is kind of a hammer, the prices are going to shoot higher. So one, I bought it right here, and the second tranche that I would have bought is if this was broken. You see this neckline? For me, this is the neckline. So this neckline was broken, is where I would enter my second tranche. So this did not happen, and what happened was that the prices went higher for 2 days. And after that, started heading lower as well. Now, what I want you to understand is that the same concept of RSI diversion that I talked before. Now, look at this low and this low. First, let me clear all this. Look at this low and this low. This is a lower low. They're almost the same way. Now, consider this low. This low is right here, and this low is right here. What does it show? Despite price forming a lower low, there is strength in the price, a strength in the market and the price. So I just do a simple trend line, and I probably bought it somewhere around here, my second tranche. So my first tranche was over here, and my first tranche is over here, and my second tranche was somewhere around these regions. And after that, the market did move around 10% or something, 8%, whatever it be. But what I want you to understand is that we need to wait for structures to be formed. We need to wait to understand, is there someone who's buying the stock? Just because you or I think that the stock is going to go up does not mean it's going to go up. There always has to be buyers, there always has to be people who at least think like you. Because let's say if you're bullish on a stock, there always has to be a other party who's having much more amount of money who thinks the same. Otherwise, why would a stock move up? So that is one thing that I follow, that a structure being formed. Now see what happened over here was that the market moved higher, right? The market moved higher. But after that, what happened? The market crashed. Uh, I wouldn't say crash, I'd say the market fell drastically. And now again we're in the same scenario that every day we are having a very high fall in the market. Something similar to this. And this is the two levels where I bought. Now these are my long-term holdings. I don't sell them just like that. I only sell them when I've held them at least for a significant amount of time or something that I believe in. So this when did I buy? When did I buy last? It was in the month of February and very early March. So March, April, May, I haven't really bought anything. And now that the price is somewhere again at this region, right? So this region is not. I'm not interested in this region at all. Why? Because there is no structure that is being formed. So you ask me where am I buying? I'm not going to buy until there is some kind of structure being formed. Do you see any structure being formed here? No. The only thing you could say that okay, if there's a wedge that is being formed. So I might be interested when the wedge is broken, there's a retest, and then it moves higher. And the same way, what is it forming? A double bottom, right? So this was the case of Nifty ITs. But what I want you to understand is that if I was someone who was just buying every tip, right? One, I would have got trapped here. I would have seen no upside at this region. And the other thing, if the second place where I would have got trapped is if I was buying any of these dips, because these are significant dips, right? But these dips are not something that I've touched. Now I have a good amount of cash that's in my portfolio that I need to accumulate, and I'll do that when a structure is formed. Now this is the case of IT. And Nifty IT, there is no structure. But one of the reasons I'm making the video right now is because there is a structure somewhere else that is being formed. And same thing I talked about Nifty as well. So you see this whole thing that is formed over here, this upside. I did not buy any stocks over here because I could not. Because that's my whole point, right? That price cannot simply just move higher, and if it is moving higher, it is bound to come down. The market is not so kind to just give us a one-side rally. That is what we need to understand. What normally people do is that people think, okay, that's 2 days or 3 days of green. Now we'll see some downside, and that doesn't happen. And later, what happens is people trade, breakouts and breakouts. So they're not a very ideal scenario. So now, if you'll see, OAI, I did not have a double bottom, right? So that was not any Nifty 50 major stock that I bought in, like for example, Reliance or something, HDFC Bank, something like that. Uh, but what levels am I interested at? So first, let's actually zoom out. Right? Only zooming out, what do we see? Nifty is at a very crucial support, right? And what is happening over here? This is our other double bottom, our vanilla double bottom that is being formed. Now, this is a double bottom that I mean, I would say it's not bullish, but something that I don't have as much faith as this one because there are tons of setups that I've created which have this, and it has minted me in the long term. Now, in this example, it did not favor me, but that does not mean that it's a bad thing. This is something that's always favored me, and that's what I want to wait. So now, what I'm going to do is that what is the neckline of this double bottom? Neckline of this double bottom is right here. So, if in case we get a breakout on this region and the price sustains here, now understand the market is too volatile. You can't just trade breakouts directly. If tomorrow there's a breakout over here, all right, let's say on Monday, this candle is being formed. I'm not going to buy anything over here. I'm going to wait for one more day. If one more day the price sustains above 16,400, that is why I'm going to be interested in buying long term. And if you know me, I mean, if you know my channel, I think I mentioned that more majority of my times, that at least 90% of my equity portfolio is of large caps. I do not invest a lot in mid caps or in small caps. I don't do value investing or anything of that. I normally accumulate large caps. I pledge them, and with that pledged money, I sell options. That is what I do. That is what I feel gives me a decent enough return. So that's the reason why I follow Nifty 50 because it gives a good indication of the large cap stocks. So what I'm going to do is that if this breakout comes, and there's another day that the price sustains this region, that is where I'm going to be interested in buying stocks. That doesn't mean that I'm going to go and buy stocks just blindly. So say that I'm interested in buying something like HDFC. So what I'll do is I'll first wait for the index to show me some bullishness, which I told you how I'm going to correct, how I'm going to check for bullishness over here. Then I'm going to HDFC and see what structure is being formed. Now we see that a good accumulation has happened, right? There's also like a triple bottom or head and shoulder, however, I mean, not head and shoulder, but a triple bottom that's formed here. So now this tells you that there are people who have accumulated the stock at these levels. So if the index tomorrow gives me a breakout and day after tomorrow sustains, and HDFC also gives me a breakout and sustains this region, then this is the price that I'm going to start accumulating HDFC. And this approach is something that's worked very well for me rather than just blindly buying every dip that comes in. Just look at how brutal all of this dip was. And if you are someone who's buying dips and it's not worked for you, this is an approach that you need to follow. And it's not just HDFC, if there's anything else, like let's say ICICI Bank. Let's say I want to buy ICICI Bank. Now see, this double bottom isn't like I told you, right? This is the double bottom that I love. A one that has a higher low. Now when do I buy this? Simple. I buy this when this breakout comes in, price sustains above here, and I want it to confirm with Bank Nifty. I'm not going to just enter because ICICI Bank has given me a breakout. I need the index that is showing me the status like the constituent to also give me a breakout. For example, HDFC, so for me to buy ICICI, this region also needs to, like the price has to move higher than 34,800, 35,000. So 35,000 is a whole number, a round number, and all these round numbers act as very strong resistance. So above 35,000, above this region, that is where I'm going to accumulate ICICI Bank for the long term. And this approach has worked very well for me. If you're following DCA, it's working great for you, then you need not even try this. But if you think that dollar cost averaging or buying dips all the time is not something that's working for you, you need to try this because what happens here is that it's very less probable that uh, uh, you're not the price is going to move lower after you buy. The downside of this is that you're not ever going to catch the bottom. Because this whole thing is that we're not looking for the bottom. We're looking for price to stabilize. We're looking for a place where our probability of the price going higher after we buy is increased. This is the whole approach, and I hope that this video was helpful for you. And thank you for watching, and do not forget to subscribe to this channel. Thank you.